Ross, on the equities side? Is ESG definitely being applied to emerging markets?
Yeah, I think people care about it a lot because clients care about it. I get asked. I've always been asked a lot about governance because I think there's this understanding amongst clients that governance is an important part of long-term investing in emerging markets. You need to ideally have good alignment of interest between management and minority shareholders. There's an increasing awareness on E&S because I think there's a growing push from clients to make sure that they can report to their end customer that they're taking these things into account. On governance, I think there's an important conclusion to make, and that is that governance has improved a lot over the last 2 decades. One of the easiest ways to illustrate that or to prove that is to simply look at the proportion of companies that are paying a dividend. The statistics I have in mind are those for emerging markets as a whole, but it's a similar picture if you look at India and China as individual markets. And when I started investing in emerging markets back in the late 90s, at that time 40% of companies paid some sort of dividend. Now that's closer to 90%. And of course, dividends, cash coming back to us, that's the single best measure or evidence that there's some alignment between management and us as minority shareholders. In China, I think when we talk about governance, another thing we have to be asking is, can we trust the numbers? And certainly there have been some case studies in the past that have made investors understandably quite wary. We've had companies in China audited by some of the big accounting firms that have been lying about their cash balances. I think as an investor, you always have to be slightly cautious, and you have to do your due diligence to make sure that you are avoiding those types of cases of poor governance. But even those have become less common. It's a while since we've had an accounting scandal like that in China. Touch wood. Hopefully say that and it will happen tomorrow. But it certainly is becoming less common to have those kind of accounting problems. So yeah, overall definitely an improvement in governance, even in state-owned enterprises. China Unicom, for example, which is the second largest mobile operator in China, they have recently introduced a management share-based incentive scheme that sets very clear targets for net income growth over the next 3 years. So you've got a state-owned enterprise there, which previously could have just been a tool of state policy, but now you've got a management team who are very clearly incentivized to grow profits and increase value for shareholders.